the Financial Survival Network, helping you to survive and thrive in the new economy. To find out where to buy gold and silver reliably at great prices, go get your free Financial Survival Toolkit at financialsurvivalnetwork.com. You'll also get our complimentary newsletter. This is the Financial Survival Network.
1490 WGCH. This is Kerry Lutz, and you're listening to the Financial Survival Network, which is brought to you by Miles Franklin. They've been in business selling gold and silver for over 20 years, and I'm a customer because when you buy, they ship. For more information, find them on the web at milesfranklin.com or give them a call at 800-822-8080 and get a free quote. So everything's fixed in Europe, so they'd like you to believe. There's not going to be QE to infinity in the U.S., so they'd like you to believe. But my next guest, he's not so easy to convince. Ranting Andy normally gives his Monday rant, but it's Tuesday, so we're getting a Tuesday rant. Hey, Andy, welcome back.
Thanks for having me, as always.
So what's your take on all this? Are we getting scammed yet again?
Well, of course. I mean, we're at a point where the powers that be are so clueless, running like chickens with their heads off, where frankly most of the votes were cast for the anti-bailout factions, but because New Democracy got the most of any party, they're deciding who's going to win. I think right up front, the other pro-bailout parties were going to fight against the New Democracy, but I think they just saw the stock market up for 2 days and they're like, all right, let's just go back to what we've done before. So here we are in the same situation as we were last week. The majority of the people are against the bailouts. The nation is falling apart, yet they're going to form a coalition party with the same morons that caused all this problem. And all it's going to do is make things within a matter of weeks fall apart. I mean, weeks. Look at Spain. Spain's falling apart right next door. Italy's falling apart. Record yields on these things, or at least multi-decade highs, just in the last couple of days. And then, of course, we have more horrific U.S. data. So the Fed is forced into a corner. They have to do something tomorrow, in my view, even if it's just to extend the expiring Operation Twist. I believe at this point they can't pretend that they're just watching and being aloof. I think they have to do something. And if they admit that they need to go forward with more Operation Twist, in other words, saying that we must keep the 10-year yield under 1.5%, they're pretty much saying, all the stuff we said about recovery is bull. And I think that has to happen. Otherwise, the markets are going to respond horribly. That's my opinion.
So where does that leave us here then? We're looking at more inflation, more printing, and no solution to the underlying problem as usual, right? How much longer can this Greek tragedy continue? Yeah,
well, the Greek tragedy is across the world. And as good as the PPT and the gold cartel and all these guys are, if they think they're going to get through this week by changing nothing in Greece and nothing here and thinking that, everything will be fine, they got something coming. Because I am never feel that strongly about things, but I've watched enough of the U.S. data and watched what's going on in Europe to believe we're past the point where the Fed can pretend anymore. That they're watching and keeping all their tools available. They have to tell the market, we're going to liquefy because nothing's working. I mean, of course, this won't work either, but it'll buy them a little more time. And remember, this is an election year. And the Fed, this is a precious chance to kick the can down the road, maybe a few weeks, if they're lucky, a few months. Because at this point, with the collapsing data across the world, and believe me, this Greek election is not going to help Greece's situation, Eddie. If they don't do something quick, I believe the markets will respond very harshly.
There's a certain almost inevitability that we're feeling about this, isn't there?
Yeah. And, forget what the markets are, quote, telling you, because they're not telling you anything. Look, I mean, all you have to do is look at a stock like Morgan Stanley. Every time it looks like it's about to fall apart, the next day it's suddenly up 5%. I mean, how many times can we watch this over a 10-year period? They rescue anything left and right. They know very well that they have a meeting tomorrow and they need to create a perception that something is good going on because, as we know, the Dow Jones propaganda average is the most watched average on earth. But the fact is, absolutely, utterly nothing is changing. Heck, look at FedEx today, right? I always look at FedEx as one of the most important of all the industrial companies because it's telling you how much trade is going on. It just reported a huge decline in its forward guidance of earnings because of declining business. And that's what you're seeing everywhere. And there's nothing that's going to help that. The only thing that's going to keep the market from literally collapsing under the weight of all this horror is more money printing. And so good luck to the Fed if they're going to try to BS us one more time with we're watching and waiting. We'll see what happens as things go on.
Yeah, the Baltic Dry Index, another good trade indicator, is trading really low. It looks like almost a double bottom happening.
Well, earlier this year, I'm going to look at it right now. Earlier this year, the Baltic Dry Index was at the levels from the bottom of 2008 when there was literally nothing going on.
Yeah,
that's how bad. And while we're speaking, I'm just pulling up the chart right now.
938 on it. That FedEx, UPS, another good indicator because it's like the old rail index from the Dow Jones that they used to watch to really measure economic activity, because this is where the rubber, so to speak, meets the road. This is where all the shipping takes place.
Yeah, the Baltic Index, as I look at it, 2 years ago was at 4,700. It's at 900 today. And like you said, it got as low as 700 in the seasonally, because it does get seasonally weak at certain times a year, like right in the beginning. But, on an apples to apples basis, it's 900 right now. A year ago, it was 1,300. A year before that, it was 3,000. And a year before that, it was 4,000. So trade is collapsing.
Yeah, this is distressing. So we can look forward to a raid on gold shortly then, right?
Well, we've been getting plenty of raids on gold, and it's fighting pretty hard. And remember, the reason that it had its big surge 10 days ago when the cartel temporarily lost control was because of weak economic data. So there's no way they're going to be able to get away with saying, the economy is better than we thought. We're going to not print money. But if they do that, they'll try to attack gold, but the market will get absolutely destroyed. So they're going to have a harder time, I should say, keeping gold down in this case, because there's no circumstance I can imagine where they can make the Dow go up tomorrow and gold go down. It's either going to be both one way or both the other way. And ultimately, if both go down, gold's going to come right back up and the Dow is not.
Well, there's a certain predictability to this thing now that even the most casual observer like myself, you could just pick it out. You just know it's happening.
Oh, they'll try it. They'll try it. But then again, they may very well surprise people by saying, we're going to print some more money than you thought we were going to, in which case, look, I remember the one time, was it 2 years ago? The day of a Fed meeting. And I'm telling you, it wasn't as much on the line like today. Because, look, now we're at a point where everything's falling apart, economic data everywhere. Europe's falling apart, China, Japan, you name it. So there's a lot on the line. I remember 2 years ago, we had one of these Fed meeting days, and there wasn't as much urgency. Things are bad, but there wasn't as much urgency. I remember that morning they knocked gold down $35 before the meeting, and then they announced they're printing money, and it went up $40 or $50 for the day. So they'll do their thing. They're always hitting, but I wouldn't look at what's going on today with the slightest bit of interest. Plus, I know I could see that the volumes in the markets are down. This is just pure, posturing going into an extremely important decision tomorrow. And, to anyone listening to this is probably the most important Fed decision that they've had to make in years because, again, remember, the Operation Twist is over. Starting 2 weeks from now. So they can't just say, we'll just keep doing Operation Twist and watching. Plus you have the election coming up. And if you're going to even remotely try to prop the markets for Obama, you're going to have to do it now. It's too late if you wait till August and September because there's going to be no impact. So this is a huge decision for them tomorrow. They don't want to say we're going to print more money. But even the mainstream articles, including the Wall Street Journal, Market Watch, are starting to say Goldman Sachs wrote a piece yesterday. Everyone's now expecting them to do something. So they better do something tomorrow is what my view is.
Well, we've known from the get-go, you and I, since we started talking a while ago, that there's no possible way for them other than to inflate. And what else can they do here? There are no other choices here, no other option. I mean, what else can they do? There's nothing else to do here.
Well, you see what I write. They've got 3 tools left in their quiver: money printing, market manipulation, and propaganda. And the propaganda is pretty lame because, they can't come out and say the economy is recovering when we had that unemployment report today. Actually, I write all the time about Yahoo Finance and the mainstream media and this ridiculously stupid things they write. You know what the headline today, the Yahoo Finance front story was this morning, which didn't come out until after the market was rising, because, as you know, the market didn't rise until after the stock exchange opened. It said stocks surge on rising housing starts. And I'm going, you idiots, housing starts were down to a multi-year low. It was permits that went up. Permits that mean nothing. And we just reported last week the Case-Shiller Index hit a 10-year low. So why would anyone be excited that people are building houses? That is the stupidest thing ever. Plus, permits don't even have much of a correlation to actual houses built. So they got it wrong. And even if it was right, it was not something that would be bullish.
No. Well, I stopped reading that media a long time ago because why bother? They say nothing and they're just part of the propaganda machine. And,
I don't read it. I just want to see what it is that they are writing as their front headline every day and how it changes during the day, because they'll write this happened because of this. And then when 2 minutes later, the markets go against it, I wait to see if they actually take the article down. And they usually don't. They because they can't figure out why rigged markets do what they do. So they just say, we'll leave it. No one's reading it anyway.
Well, they're so uncurious anyway about what's happening. They get their story and that's what they reproduce. They just cut and paste and it's up and more disinformation hits the market. Right. And luckily people can listen to you and me. They can go to milesfranklin.com and buy bullion at really below market prices, it seems to me. And they better do it soon, because if they haven't, then they're going to find out why they should have.
Yeah, just, look at where we are right now. We're in June, and just imagine where things are going to be year end. Again, we're in the summertime now. Just picture when we get to the fall, when it becomes the real, fear time of the year. And you have all this stuff going on in Europe, and the United States economy still plunging. Plus, you're going to have election campaigning. You're going to have the next debt debacle, because remember, we're on schedule now for September, October to hit the debt ceiling.
I read an article for the first time in the mainstream media about it yesterday.
Yeah, they have to address it at some point, because they're not going to be able to kick the can down the road. This is going to be a vicious campaign cycle where particularly the Republicans are going to highlight every horrible thing going on because they want to win the office, which is what you do. And it's going to all come out. And Moody's and S&P, remember, they've said, we're going to have to downgrade you if something doesn't happen. And that's going to be a year from nothing happening. So I expect a lot of bad things coming this fall.
I have a thing called the marriage hedge, because if you can find an Indian bride who's got a good dowry, that could be another way to invest in gold, So something to consider, because that might be your only choice if you don't buy it soon. And
while you're talking about Indians, has anyone taken a look at the Indian rupee up today to another, or I should say up, the dollar's up against it. It's down today to a new all-time low. It's been plunging. The price of rupee gold is almost at an all-time high, and these are the largest physical gold buyers on earth. And that's with the government trying to hold back, trying to keep them from buying gold because of their own inflationary policies. There's going to be a massive surge of buying in India once that all-time high is broken, and we're something like 5% from it right now.
Hey, you're seeing the ruble has gotten killed, all of these currencies, and that's relative to the dollar, which means nothing in the long run. But yeah, we're in for some fun times. So, Andy, we'll talk to you next week. Hang in there, and you be well.
And I may have a special guest for you next week, so we'll keep everyone in suspense.
Ooh, yeah, we like special guests. And
okay.
Hey, we'll get a heads up. All right, Ed. Take care. Bye.